So I do think it's more about people not knowing or being educated on precious metals generally, and then knowing more about gold or think they know more about gold and silver. But the dynamics for silver, once they understand it, I think you'll see more and more people come into the silver market. On top of that, I'll contradict myself. Even if people don't understand it and gold gets to pick a level, I don't know it, but 3,000, 3,200, a lot of people start to wake up to the bull market in the metals and say, oh my goodness, I can't afford a gold coin at 3,200 an ounce, but I can still buy silver at $70. And that spillover really will take silver to, I think, outperform gold probably 2 to 1, 3 to 1, maybe 4 to 1. It's such a small market, and there's so much pent up money seeking a safe haven. Dam breaks, there'll be a flood of money into the precious metals. A lot of it will go into silver because it's more affordable.
Silver's smaller market size makes it more sensitive to supply and demand changes, leading to higher gains in bull markets. For instance, from 2008 to 2011, gold gained 166%, but silver skyrocketed by 448%. While gold surged by an incredible 2,328% in the 1970 bull market, silver's price soared even higher, climbing by as much as 4,000%. While gold reaches new highs and basks in the limelight, silver has been quietly building potential. Up 31.5% year-to-date, silver has outperformed gold in 2024. However, it's still trading within its summer range of $27 to $32. As the driving force behind the Morgan report, DavidMorgan mentions that silver used to lead the market but now alternates with gold. However, with all major factors in play, Morgan suggests that if gold prices surge past $3,000, investors may turn to more affordable assets, potentially causing silver to outperform gold. Regarding the gold-to-silver ratio, Morgan notes it was historically under 20 to 1 until silver was demonetized, while Morgan predicts that dual demand from industry and investors could significantly boost silver prices. Since early July 2024, the gold-to-silver ratio chart has fallen nearly 70 points. A tiny push higher in the price of silver will cause this ratio to break down, triggering bullish energy in the silver market. The gold-to-silver price ratio continues to trade around 80 points. Silver had an amazing opportunity to stage an epic rally after its breakout in April, pushing the ratio to the 75-point area. However, the time was not right, and the market was not ready for silver to move to all-time highs. Based on fundamentals, Morgan emphasizes that silver is largely seen as an industrial metal, with only 10 to 15% of its investments. However, he notes that in 2020, over half of the silver supply went into investment demand. Hence, rising market fears could trigger another surge in institutional buying. Now we present the clips of DavidMorgan's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
If you go back, 20 years ago or whatever, silver used to lead quite often. Now they do go back and forth. I think the fact is mostly psychology, which means, you take someone at my age and, we're still seeing silver coinage in the general population when I was a kid. And then that ended in 1965. But people my generation had a much more association with silver being money because they saw it in the coinage, and that lasted, I don't know how long, 10 years, 20 years. But now almost everybody, the next two generations, have looked at silver as an industrial commodity. And it doesn't really ever get spoken about anything in the mainstream media. I mean, they post a price of gold and silver every day on Bloomberg or any major financial channel, but seldom they even talk about it. And when they do, it's usually gold. Very seldom. I mean, I got on national TV probably 4, 5, 6 times in the bull run from 2000 to 2011, but that was pretty rare. So I do think it's more about people not knowing or being educated on precious metals generally, and then knowing more about gold or think they know more about gold and silver. But the dynamics for silver, once they understand it, I think you'll see more and more people come into the silver market. On top of that, I'll contradict myself. Even if people don't understand it, and gold gets to pick a level, I don't know it, but 3,000, 3,200, a lot of people start to wake up to the bull market in the metals and say, oh my goodness, I can't afford a gold coin at 3,200 an ounce, but I can still buy silver at $70. And that spillover really will take silver to, I think, outperform gold probably 2 to 1, 3 to 1, maybe 4 to 1. Again, it's, as you point out, David, it's tracked copper because it's perceived to be an industrial metal in most cases. You look at the percentages. 70% of the silver market's industrial usage. 4 or 5% is silverware, and you got maybe 10% in jewelry. So now what's left? 10%, 15% for investment demand. That's very small. But when you get a large investment demand like had in 2020, where the investment demand was 320 million ounces on an institutional scale and 200 million ounces on a retail scale, or 530 million ounces total, you had more than half of the total silver supply going into investment. That could happen again. It happened in 2020. That's a fact going forward. If the market gets scared and says, geez, I don't like stocks anymore, I'm scared about the housing market, I'm not too sure about my retirement, I'm going to hedge my bets, I'm going to buy some precious metals, silver looks like a better buy than gold, then you could see a large increase in institutional purchases in the silver market again. If you go back in history and you look at gold and silver, the ratio was under 20 to 1. So the most you had to pay for an ounce of gold was 20 ounces of silver. That held for hundreds and hundreds of years, 13th century, 14th century, 15th century. It wasn't until the end of the 18th century where silver was really demonetized. So if the banks treated silver as a monetary asset, believing the ratio wouldn't be 85 to 1. The ratio would be more like the classic ratio of 15 to 1 or maybe even 10 to 1. But silver is being used in industry at 70% of the market, as we outlined earlier. So any new buying on the monetary side will take the price far, far higher. And so two things, as we said, when gold gets too high a price for people to afford it, it'll spill in the silver market. And then you've got a dual demand on silver. You got, Elon Musk and Samsung and 3M and all these corporations that need silver, they're out of business. Well, they'll have to buy it and stockpile it if it starts to get a tight supply. And then the investor community will see that. And so they'll come on board. So it'll be like a double dip where you get a kind of a shark feeding frenzy, potentially, where both those demands come at the same time. So it's a simple word, money. When silver is money, it really follows gold or leads gold. When silver is no longer money, then we're in a situation where we are now, where just a tiny amount of the market has to consider it to be money or a hard asset. I mean, you look at the rhodium market. Rhodium certainly isn't monetary metals, never thought to be, but people knew it was scarce supply. And palladium was the same thing. I made a great palladium trade. And I don't consider palladium money. I mean, I could argue classically it is, but coming back on point. So you can just take the approach it's industrial only. The silver doesn't ask, are you buying me for industry? Are you buying me for investment? It doesn't care. But the demand is there. The demand is there.
During the interview, DavidMorgan underscored that gold acts as a barometer, which signals future economic troubles. However, he shares that his sources in China reveal that the Chinese public is beginning to buy silver again for the first time in about 50 years. The current situation suggests that China's actions could significantly increase silver prices, potentially disrupting global supply chains. Analysts speculate that China's stockpiling efforts are either a defensive measure against potential conflicts, such as a possible invasion of Taiwan by 2027, or a preparation for an economic downturn. Although silver batteries are costly, Morgan notes that solar energy is boosting silver demand, and the efficiency and durability could lead to greater use in electric vehicles. The firm notes that silver also sees increased demand from the solar panel market. Analyst firm Metals Focus has pointed out that the silver market is expected to post a substantial deficit of 215.3 million ounces in 2024, the second highest in over 20 years. Let's get back to the interview.
I think that gold really acts as a barometer, not a thermometer. You want to know how hot a day it is, you look at your thermometer. But if you look at if a storm is brewing or not, you look at the barometer. The barometer of gold is saying problems ahead. It wouldn't be doing that if it didn't forecast the future, which is what gold does. So it's forecasting us stormy times are ahead. I'm looking for gold to probably exceed today's price, which are in the 2,600 level by the end of the year. Could we hit 3,000 by the end of the year? I wouldn't say we won't or we couldn't. I think it's unlikely, but I think we're going to see higher prices. We are going to get a pullback here pretty soon. It is overbought technically, but things can stay overbought for a very long time. Really is interesting. What's interesting is that I have a couple sources in China, and one of them told me that the Chinese public is starting to buy silver again. First time in about 50 years. Well, I had this guy on LinkedIn reach out to me, and he, had all this information. He looked legit. I looked at his profile. I spent some time doing a little background as much as you can. And so I asked him, I go, I got the source and he says this, and he verified it. He said, absolutely, the guy's spot on. He goes, the Chinese people are really looking at buying silver now. Well, of course, solar is obvious. I mean, that's what's really run the market. It's this, amount of photovoltaics that are being bought. What's above and beyond that is, I really don't know. Maybe there could be anything in the electrical sphere. Probably could be batteries. I mean, I think no one ever talks about, silver batteries, but you have a silver battery in a pacemaker. You have it for your hearing aids. Silver batteries are very small, very efficient, and last a long time. So when you have a situation where you need, power, no drainage, there's a lot of advantages. The reason you don't see many silver batteries, except in those small applications, is cost. Silver, as cheap as it is much more costly than doing a lead acid battery or lithium battery or that type of thing. So the push is for the cheaper ones, which is what, basic economics. If I can get the same power out of a lithium battery and it only costs me this much to make, why would I use a silver battery? But if you look at the military and mil specs, a lot of those batteries are silver based because they have to be rugged, they have to charge fast, they have to be reliable, and they have to last a long time. So I think that's an area that could, not necessarily would, come to the fore, but you get this EV thing and you start using a silver battery or two, just some guys goofing off, and all of a sudden they see how fast they can charge it and how long it lasts, and the recycling of it makes you money, doesn't cost you money. There might be something to it.
The combination of rising gold prices, renewed interest in silver from China, and increasing demand from the solar and battery sectors suggests a potential surge in silver's value. Given these developments, how will the evolving dynamics between gold and silver impact your investment strategy in the coming months? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.